Hey guys, today's Tuesday. Just doing a quick breakdown of today's trading day. Was trading on paper with my iPad today, taking the trade right here with the long close macro. So was watching the opening with my iPad. I actually had the chance at my internship. But yeah, so today was definitely a difficult day. We are still in trading conditions, but those are the days which we kind of want to avoid. Where we have to be really cautious, where we don't have to also feel kind of like FOMO, fear of missing out, because yeah, we are in trading conditions, but that's not indicating that we are going to have always low resistance and quality conditions. That's what we're going to talk about. Also, a quick glance at the news calendar. So today, Tuesday, yeah, tomorrow high impact news. Monday and Friday we are high quality trades, trading days. So right from there, you could already tell that it's likely that we will see also a more high resistance day soon. But let's start on a daily chart. Right here you can see it already that we wait. Let me just remove this only to the 1 minute chart. Right here you can already see that we have this huge wick to the downside. So not really, yeah, staying bearish in that case. Yesterday was really a clean expansion to the downside. Also in that case, aligned with the high time frame gap we had right there. So new day opening gap after a daily buy the liquidity sweep. And now we also trade basically into the quadrant level of our order block right there. I think we could also look at it a bit different. Yeah, but I leave it like that. So let's drop to an hourly chart. Kind of rejecting of the quadrant levels, not really, but yeah, close below CE, so definitely expecting lower prices. I don't really know if we are even respecting, in that case, the quadrant levels of the rejection block, or if we just reverse the because of yeah a other PD array. But in that case, now we also swap NYOKZ kill zones as liquidity. We definitely do had a kind of yeah clear buy liquidity right there. So that's something we have to really keep in mind. We cannot always stay too one-sided, especially in that case with this clear buy liquidity draw. It's kind of a bit dangerous after we took out every liquidity pool that we're going to still trade lower, and that's what's the huge mistake. Basically, if the opening expanded lower without us and takes out every daily draw, and we had basically done with our daily objective, then it's really difficult to take low resistance and quality trades, because to take trades to the upsides will still be high resistance until we finally move higher. That can definitely take a long time. In that case, until the long close macro. But also lower is not really easy. So those are the conditions of today. Also, quick glance at regular trading hours. Already right here, once again, you can see why it's difficult, because we have a huge new opening range gap, and that's in that case only manipulation to the downside. That's why I was also looking for higher prices already, because we just only trading lower and basically trade against regular trading hours quadrants. We did not trade already back to the upper quadrant level, and therefore we are definitely oversold. Now back to electronic trading hours. Wait. So now let's talk about the trades I could have taken. So already right here, that's the quadrant levels of is it actually of the daily wick right here. So that's something we can definitely look at. Was actually quite clean how we perfectly trade back to CE. That's really bearish. After that we completely sold off right here, but that's not really how I trade. So I don't really trade in that case the opening, because we opened up right here. Yeah, that's definitely manipulation, but not really enough. We did not trade back to the upper quadrant level. We did not take any out any buy liquidity. Also, the S&T is not really in play. Let me check once again. So on the S, we do not even have such a large wick. You could argue that we have S&T there, but to me that's not really enough. So I don't like to take the trade right there. To me that's a bit too early. Also with the clear buy liquidity pool right there. Of course we have SMT, a higher time frame SMT being in play, but I don't know. It's not how I like to trade. And that's why it's so difficult, because after we trade lower, we took out NYOKZ says liquidity, London lows, also daily says liquidity, and from there on we are kind of done trading lower. So especially we have regular trading hours being in mind as well. We then want to look for longs, and obviously we have displacement, we close above, we have CST right there, and yeah, that could have been already right here a kind of a like a trade. And I think those are the really dangerous conditions. Why? Because the lower time frame setup right here looks perfect, but it will not play out because we have such a strong bearish trend, and it's just unlikely that we are going to retrace this aggressive higher. That's just the truth. At best, you wait then for 10 a.m. and then we have S&T being in play. 10 a.m. trades higher, and in that case, I think you can go long right here, also close above the down close candle right there or right here. So once again, CST, also entry right this like this. But yeah, once again we form S&T and trade lower. So that's why it's so difficult to take longs against such a strong bearish trend, because NQ will definitely take its time, even though the lower time frame really looks clean. So the setup is there. We have displacement, we have CST, we have the right time, we have even S&T being in play, and still we fail to trade higher, as you see right here. And yeah, that's probably also, you could argue that's just a loss which is due to your win rate, which is not 100%, so just a trade which you take basically 10 times and 7 times it is a winner. But I don't know, to me it's not really good. So against the higher time frame, still align with regular trading hours, because we want to see that we trade back to the 930 opening price, but it's still a large price one, and for that we need the right time, and that's why we need actually to see the long close macro for that. So yeah, trade lower, and from then only high resistance higher. Long close macro, to me, once again, looking at the short right here, I think it's not really a bad trade. So that's the one I took on paper, but I'm not really sure. So if we take the high of our AM session, you can see that we almost trade also back to the upper quadrant level, kind of completing the market maker buy model. We trade back to the low of the daily rejection block, also kind of respecting it. S&T being in play, this plays lower, inversion trail gap right there. I think that's a possible trade. I think that's something what can also work out if we still have a draw lower, but in that case it's just that we're going to trade lower. And what's already indicating that is the 5-minute right here, respecting CE. That's really V-shaped. In that case, also with the large wick right here, that's not enough. So going to trade higher, kind of still in a market maker buy model, in a high time frame market maker buy model, and the obvious buy liquidity targets right here, and the midnight opening price is just in that case the draw. Also, once again, regular trading hours opening range that we want to trade above the 930 opening price. Also back to that case the upper quadrant level, which you can see right here, gets also respected. So that's really important. Now also trading probably back to CE, something you can also look at. But yeah, so that's what I wanted to talk about, why you have to be really careful. Definitely shorts right here are in play, but that's not how I trade. That's too early to me. Trading inside a range, we did not take out the buy liquidity or sell liquidity. We don't want to trade inside the range. That's what I really learned as well. So we have to be patient. at best what could have been also a possibility, what would have been even perfect. So what could have been a possibility is that if we take out excess liquidity right there, but we still leave a large wick as we did right here on the 5-minute chart, and from there on already trade higher. So nobody's right here, only from there on trade higher. That could have been a short possibility. So that we, I don't know, that this is our 5-minute wick, so that we trade higher from here, something like this, and already inverse right here, or even trade into the new open range gap, so the upper quadrant level, maybe also create SMT with the AM session high right here, and from there on then have a low resistance Macro MMSM model to the downside, taking out maybe AM session liquidity, probably trading back to CE right here, and then consolidating and trading lower with PM, something like that. So that could have been definitely a possibility. But in that case, we don't want to trade basically. So that's basically what I want to see. That's what I expect. But in that case, we don't want to take the longs against the high time frame trend. But because it can also be that we only consolidate and then trade higher. Obviously, there are always scenarios you want to see, you want to see play out. But in that case, yeah, don't take trades against the high time frame, and that's the reason why high resistance and time distortion. So that's what we want to avoid at all costs. That's where we have to stay patient. We took out every excess liquidity draw, therefore no continuation. We don't want to trade against the high time frame trend, so no trades. Then stay patient, and I think the long close macro right here is not even that bad. I think it's a kind of valid trade, which sometimes also, which could have also played out if we would have maybe retraced a bit higher and then see a really clean Macro MMSM model. In that case, it's maybe not perfect. In that case, the long close macro is only a short-term run on stops, and we are going to see a continuation, so it's only a retracement. Right here to the order block as well. But yeah, so therefore buy liquidity was in the crosshairs. But that's a trade, so that's what I want you to talk about. Not every trending day is easy. If the opening trades just low without us, we can't do anything. We have to stay patient. We don't really want to take a retracement if it's not really clear. And there are sometimes clear market maker buy models which are a retracement. I will look it up for you and show you, but it's a bit different. Why? Because we already took out regular trading hours as liquidity. We scrapped also a lot of excess liquidity, so also NYOKZ kill zone, Asia, and kind of, I don't know. It's also, I think, a bit conviction, but also how we trade right here. It's just a cleaner market maker buy model. It's way more V-shaped. It's way more high probability that we are going to take out the low-hanging fruit right there. And then it's possible to take such a trade against the higher time frame if you just aim for the low-hanging fruit. But if you compare this, it's not really looking the same. So it's way sharper and more aggressive to the downside. Yeah, I don't know how to explain it, but yeah, just don't take really trades, or yeah, we have to avoid trades against a higher time frame trend and stay patient in that case. If we take out every excess liquidity draw without us, that's just the case. Yeah, it was a bit yapping today, but that's it. Hi guys, job not finished. Actually took a trade within yeah, our lunch macro, so that's what I'm going to talk about now. Also was actually regarding this right here, also saw that many of my mentors, I don't know how to call it, but many of just profitable traders I watch, Chermane trades, ICT took longs in here, and therefore that was definitely the right approach. We are trading back to our regular trading hours new open range gap. We are oversold. We scrapped daily size liquidity. The objective is therefore done. And also in that case, we trade into the high time from Peter. That's also important right now. That's also what I'm going to do in my next video, today's trade breakdown, but that's still from yesterday. So still, yeah, quite important. In that case, 10 a.m. is not the right way to look for longs, especially if our setups already presents itself above the 10 a.m. opening price. It's just a way to choppy, I don't know, time distortion, high resistance consolidation. We have to be patient. We have to wait for 10:30 at least. Really nice fair gap right there. Also reacting off the order block, and also really important, we respect CE with our 5-minute bodies right there. So right here we displace below it, we disrespect it. Therefore we see once more a low to the downside. That's really important. That's why this to the upside does not play out. And then we trade higher, and then we respect it, and then we are going to see our market maker buy model to the upside, taking out our really equal highs right here. AM session high, NYOKZ buys liquidity, London highs, and also back to the midnight opening price. So that's what I want you to talk about. So therefore we have to stay patient and expect a high time for retracement after basically, well, with 10:30 with the long close macro. And also right here, as you remember, I took a trade right here within our long close macro to the downside. I think it's not even that bad. You could say that we also traded into the high time frame period right there. We have SMT with the right time to now trade to the downside, as that we have only a short-term stops right here, and then we continue our trend to the downside. But in that case, that's just not really enough. We have such a strong draw for the buy-side liquidity. We have such equal highs, and we are just done working lower. Otherwise, we would not have so much high resistance, so much consolidation right here. Now we are definitely in market maker buy model. Still, I'm not really I'm content with the trade, I guess. It's not the best trade to take, but I mean, it is what it is. In that case, we're just trading into the inverted gap right there, perfectly respecting it, as you can see right here. So that's maybe something you could have been also aware of, and then just went basically break even, or even go long in here. So definitely also a possibility. But I think I marked out that we trade off the order block right there. It's a bit the same. But yeah, then now let's talk about the lunch macro trade I took. So why does this play out right there? It's because we swapped external buy-side liquidity. It's because we traded back to the CE level of our new open range gap right here. You can see we have to go to a 5-minute chart. We trade to it right here. I think it was right here. And yeah, it's right here, right? I'm not sure. Wait, let me drop to a 1-minute chart. Took the short right here. Yes. So basically, we trade right here back to the CE level. Kind of failed to reach it. In that case, I kind of indicated that as bearishness. But as you see, we need also a body closer there, and then we were able to slowly trade lower. Now with especially with AM. But yeah, still we now balance our new open range gap perspective. Basically, we trade back to CE, we trade back to the upper quadrant level. That we close in the gap is unlikely because we still have the strong bearish trend, and therefore I'm content with seeing that. I like now to see that we see a reversal model after we took out external buy-side liquidity. And that's basically in that case London highs, NYOKZ buy-side liquidity, also SMT being in play. And yeah, that's the short I took. And that's really important right here, wrong stop loss placement. So I had my stop too tight. I got stopped right there, only above the breakaway gap. Once again, especially with the 1-minute chart right there, with the down close candle right there, which has no wick, it's really important that we stay kind of really cautious. We could have also seen a possibility. So we are definitely reacting off the 5-minute quadrants of the 5-minute wick right here. That's basically our 5-minute breaker, bearish breaker. But I think our stop needs to be above the bodies right there. Because once again, you have a rejection block right here, and you have a larger up close candle right here, which overlaps the rejection block. So that's basically a bolo. Once again, yeah, stop would have been perfect above the bodies, and then we kind of saw a retracement to the downside. I was not able to manage the trade, therefore, yeah, short re-entered right there, and I typed out low-hanging fruit. If we trade lower aggressive, we might trade to the low of the daily rejection block, and that's right here. And now you would say, yeah, your trade failed. Actually not. We had SMT with ES. That's a bit unfortunate. So I was not able to manage once again the trade, so I was not seeing it. It only paper. So but yeah, we had SMT. That would have been first partial break even, and then yeah, we are done. But in that case, I had still my buy order typed out right there. But yeah, we trade back to the upper quadrant level, and also to the CE level, and eventually also to the lower level of our daily rejection block. So that's where I got out of my position, because I had still this buy order right there. And then we trade lower. Wait, let me check. Okay, it's already within Asia. Or before Asia, I don't know. But yeah, that's also within our long last hour macro, but that's basically it. So not really a perfect trade, but yeah, that's why you want to see that the high time frame market maker buy model is finished, and then eventually we can trade lower. Still was not really a good trade, but yeah, something I wanted to talk about. Also the yeah, that right here, longs were definitely the right play, but those are still daily conditions which are difficult, not like today, which I'm now going to talk about once again today. Today's Wednesday, before FOMC impact news, but really high quality inversion right here, perfect short, and also 10 a.m. continuation, you can see right here. So based off the 10 a.m. opening price, and yeah, so but that's what I'm going to do in my next video. So see you soon, and safe trading.